This is a strategy that you can put into place right now that will permanently change your perspective on crypto crashes and bear markets. A strategy so simple yet so effective that the ones currently using it, to the average person, seem like they have an unfair advantage. Once we walk through the pattern that makes this strategy possible, you'll understand why a crypto crash is no longer something you want to avoid. Instead, the crypto holders using this strategy tend to feel a level of excitement and a renewed sense of confidence because they now know how to benefit from the situation. Finally, you'll no longer have to feel caught off guard the next time your friend or family member smirks and asks you, "I heard Bitcoin is down. How's your portfolio doing?" Because our plan for the next few minutes is to understand from here on out how we can use a bear market to our advantage. We'll be looking to make use of a pattern that could allow us to more than triple our current incomes in the process. If you're new here, welcome to the channel. It's been a jaunt, but you've made it. Subscribers to the channel are people from all walks of life who have an interest in cryptocurrency, want to learn more, and prefer to do it visually. I'll be here to make it easy for you. Though before you even think about implementing this strategy, know that it's more of a process, a way of doing. It can be done for as short of a time or as long of a time as you'd like. That part is up to you. There is some risk involved, but the best part is we're not hoping to get lucky or hit a jackpot. This pattern has happened before, and it's happened multiple times. We're just going to be taking it for a ride the next time it does. Listen up, because I'm about to go over all of the details of the strategy. But first, could you imagine winning $1 million? Except there's a condition. To accept it, you have to pick between one of two options. The first option is you take the money, but it has to sit in a safe for 5 years before you can think about touching it. The second option is you take the money and invest it into an asset, regardless of what it is, a house, a stock, or a cryptocurrency, and let it sit for 5 years before you can touch it. Which option would you choose? One option guarantees that after 5 years, you'll have exactly $1 million sitting there waiting for you. What will it buy after inflation? Now that's for another conversation. While the other option carries the risk of the investment you chose and doesn't guarantee anything. We don't know what's going to happen 5 years from now, but what we do know is what happened over the last 5 years and the 5 years before that. We can take that information and identify patterns that have occurred over time, and while patterns aren't guaranteed to repeat, if something's been happening consistently over a long enough time frame, it's likely it'll happen again. Personally, I'd pick option 2 because I know that that money will do more for me invested than it will sitting in a safe somewhere. I want a return on it. The thing is, most of us don't have $1 million lying around, but what we do have is the stream of income from a job or maybe other asset. These funds might be limited. In my case, limited is an understatement. But what if we took our limited resources and used the patterns we've observed from our experiences to make the most out of them? For example, if house prices in your area had a history of rising over the years, but often the prices drop significantly for no real reason other than because of the local homeowner's mood, only for them to continue on rising to new highs in the future, why would you not take advantage of these price drops and score yourself a property at a discount? You know that in as little as a few months to a few years, the price of that house you bought will be right back on its way up. You've seen this pattern happen over and over. You know of people who've benefited greatly from it in the past, so why wouldn't you consider taking advantage of it yourself? Let's take a look at Bitcoin because this example has played out several times in cryptocurrency. Over the course of Bitcoin's history, it's appreciated in value quite substantially. Along with it, so has the rest of the cryptocurrency market. We could dive into the driving factors of why this happens, but for this strategy, all we need to know is that any price action up until now has been a direct side effect of adoption and speculation. Two things that aren't going anywhere anytime soon. People love to speculate, and cryptocurrency has yet to reach its full potential. With this in mind, and if you haven't always been following closely, you may not have noticed, Bitcoin does something quite often. No one knows exactly when it will happen, but over the last 13 years, it's done it over and over again. It crashes. At some point, the price of the crypto king and the rest of the market tumbles down from its recent peak and sets its sights on establishing new lows. This next part is crucial for understanding the most important part of being successful during a bear market. If we were to walk through each time Bitcoin has had a large crash following a large peak, it would look a little something like this. In 2011, Bitcoin drops 93% from its previous high, making a full recovery by 2013, but then falling 72% from that peak, fully recovering again by 2014, and then coming down 85% from that new high. Recovering at the tail end of 2016 and beginning of 2017, it sets new highs again in late 2017, then drops by 84%. Quite predictably at this point, it makes a full recovery by the end of 2020, sets a new high, and at the time of recording this video, has now touched 74% down from where it once sat. Not even considering the new highs Bitcoin has reached, each time it falls, it at the very least recovers to where it once was. Here are where the calculations come in. We could take the average number from all of the previous bear markets, which would be 81%, but to be even more conservative, let's take a number even lower. Let's take 70%. If we can count on Bitcoin and the overall cryptocurrency market to come down at least 70% during a bear market, and at the very least, repeat part of the pattern it's been making for more than a decade now, and have its price simply recover to its previous levels, As a crypto holder, employing a strategy of buying Bitcoin when it's 70% down or more would mean that any money invested will more than triple once Bitcoin simply makes a recovery. And we're not even factoring in any new highs at this point. Think of it this way. You could be sitting around during a bear market feeling stressed about the slow movements or lack of upward price action, or you could be waiting and watching excitedly for Bitcoin to come down over 70% from its peak because you plan to make the most of the discount. Even if you didn't have any money saved in preparation for a crash, remember, once the market recovers, the monetary value of Bitcoin bought when it was down over 70% is now 3 times as valuable after it makes a recovery. This means that if I was getting paid $15 an hour now, any Bitcoin I buy during a bear market effectively transforms my $15 an hour salary into $45 an hour. If I make $25 an hour, the amount I set aside for a Bitcoin bear market is now worth $75 an hour. We don't know for a fact what's going to happen a year from now or 5 years from now. All we have to rely on is our past experiences and what might be most likely to happen. It's the same answer whether we choose to buy a house, stocks, or cryptocurrency. Here, the difference is we've been able to identify a pattern, one that's occurred consistently over more than a 10-year time frame. We're not hoping to just get lucky, we're taking probability and using it to our advantage. It's pretty simple, really. Not only are more people using cryptocurrency year after year, but with Bitcoin specifically, it's also becoming more scarce as time goes on. Currently, the inflation rate of Bitcoin sits at 1.69%. It drops every 4 years, and by 2024, that number will be less than 1% at around 0.8% per year. And by 2028, it will be under 0.5% per year. This, in conjunction with increased adoption, means that the pattern of Bitcoin making a full recovery is going to be extremely likely to play out. Of course, I'm not saying you need to make a decision one way or another. I'm simply here to bring this pattern to your awareness. And whether or not you decide that buying Bitcoin after a 70% drop is a good strategy, well, that's up to you. Thanks for watching, and I'll see you in the next one.